What's up, motherfuckers? Time for an update video. Haven't made one in a while, so here we are. Everything looks great. All around the board, SPY, fantastic recovery end of day today. Looks great. Retesting a macro breakout. AMC, nothing but fucking green. Another new local high today. Looks amazing. Third close in a row over the 20 EMA, by the way. And we're still looking for more upside. We're looking for a gap up still. And that's pretty much it. Let's just jump into the video. And we'll start with SPY because would you just look at that? Just look at it. Perfectly symmetrical move here on SPY. So once again, starting from the middle, the blue box here, your lowest low in range. Bounce up, you have one break above right here. This was retesting the macro descending broadening wedge where you rejected that. But here's the middle of the move, the first cup, coming into the red where you dip below 380 on both sides. You dip below here, up to 418 on both sides on the dot, where you reject, down to 380 on the dot on both sides, where you find a bounce, up to 460 on both sides, where you reject again, and then down to 418 on both sides. And this looks great. Pulled back. I said when we got to the bottom here at around 418, SPY would be pretty volatile. That looks pretty volatile to me. Very strong recovery into end of day today. Absolutely fantastic chart. Landmark wise for SPY, having two wicks here, it's possible that these are these two wicks here on the other side, and this pop is the equivalent of this here. And there is actually a descending resistance here. It is possible that SPY rejects that and then comes down again to retest this trend at 418, maybe even coming lower, which is this wick here. It's possible we see that. It's also possible this is good. This is good for the retest, and this will be the climb to all-time highs for the S&P 500 starting here. You know, whether we get this pullback or not, SPY is going to new highs. So I just figured I would point that out because this looks absolutely fucking incredible. Seriously, looks amazing. Before I move on, this is a macro breakout. This is a macro retest. This horizontal line at 418 acted as an extremely strong resistance for a very long time. And it's indicated here, all these circles, every time we rejected that, pretty much on the dot, fighting to break through this. Got that one break, that was a fake out, rejected again, rejected over and over again. That was your ascending triangle there. Your ascending triangle of 418. That was your breakout up to 460. Now retesting, bounced off perfectly. It looks amazing. Moving on into AMC. AMC's macro, you know, same shit, different day. So we'll start from IPO, which is right here. Your January and June squeeze equivalents, your green and yellow. And then over here, so this is one macro right here. And this is the second macro right here, green and yellow, your January and June equivalents, the V-shape, macro break, gap down, macro break, gap down, into the downtrend, descending wedge, green, red, blue, green, red, blue, drop to the flat portion, play out the flat portion. Third bottom is the all-time low, the lower low, the lowest low of the flat portion. And from that point, the equivalent would be right here. You're squeezed into a new macro. That's what we're looking for. Also wanted to point out that each descending wedge, the point at which support and resistance meet is your third bottom. So when it meets here, that's your third bottom. And where it meets here, that's your third bottom. I theorized a while back that this point at which the wedge, the support and resistance meet, that point is actually the beginning of a new macro. And also at the same time, we're retesting this macro trend, the most macro trend of AMC, this descending trend here. First bounce off as support, 2 and 3 as support, 4 and 5 as support, break below it, reject it. Now it's resistance, the original flat portion, reject, and then you finally break through, macro break there. Gap up into the January squeeze, pull back, retesting on it into the June squeeze, and then pulling back all the way again, playing out the macro again, all the way down to this trend where we're establishing support. Once again, this trend is beating zero relatively soon. Pretty much at the start of 2024, this trend will be meeting zero. And that's it. One other thing before I move on. The first macro from the beginning to the top of the move was a 92% move. The second macro from the beginning to the top of the move was a 1200% move. And the new macro that we're about to get, I'm looking for a higher percentage move, higher price target, i.e. my price target of $1,400, which is based off Fibonacci extensions, which is also pretty conservative in my opinion. I've covered other potential price targets, 2,600, the Fibonacci spiral. We don't have to go too crazy into that. We're still looking for a macro break, but it looks absolutely amazing. It looks perfect. Absolutely fucking perfect. Now let's get into the tracking. And you've seen me track this for a while. I wasn't actually tracking this is January 2023 on the left and the current on the right. I wasn't actually tracking that. That was actually Babs tracking that. I was tracking the July move, July 2023, compared to the current on the right. Same fucking move. It looks different, but it's not. It's the same move. And you guys have seen me track this for weeks now. If you're in the Discord, you've seen it. You've seen this play out perfectly. So we got the break, which is right here. We're pretty much sitting in no man's land right now. We're right in the middle of the break. So this was the gap up here. We're getting some intraday green candles. Still though, we're waiting for the break. I've kind of stopped tracking this. It's pretty much irrelevant at this point because this gap up, which is what we're looking for, there's nothing to track here. There's no candles, there's no intraday candles to track here. It's just a straight shot up after hours. That said, the January tracking actually has intraday candles to work with. And this looks great as well, where all of this would have played out. And then this is your break, this is your break. And then you actually get this ascending trend here. You form two higher highs, pull back to the trend, establishing support, and then you double top the move, and then you get some boom candles, assuming that would be the gap up as well. And I don't want to get so crazy into tracking the candles on the micro, looking at 1 hour, even 30-minute candles to say you are here. But just a roundabout, this is what I would say is this is the break above the range. That's the break above the range. And then this is your ascending pattern, and that's your ascending pattern. We're waiting for this break. Now, I did track this on my own. I'm not going to include it in the video. I have two possible scenarios for where we could be here. And we're there. We're ready for this move up. I mean, we're days away from this move up. So that's what we're looking for. And that's pretty much it for the tracking. Right now, we're really just sitting in the middle of a break, waiting for the gap up. We're right there. Every form of tracking, the January, the July 2023, the flat portion, I'm about to go over that. We're looking for a gap in every scenario, a gap up. So before I actually get into that, I wanted to mention one other thing where this bottoming formation that we had and now climbing out of it, the V, the macro V, which would end with a macro break when the V finishes playing out, and a new macro, i.e. a squeeze. So this climb back up, the range we're fighting right now for support or resistance, 1040, 1050 range is actually the previous all-time low of the January 2021 cycle flat portion right here. So I just wanted to point that out. And I'm assuming when we claim this, we will be gapping up. If not, we just gap up from here. But I'm assuming we probably see intraday candles breaking above this range, and then we would see the gap up. That's that. Now getting into the flat portion, and I've covered this a million times as well. And what we're looking at here on the macro is the original flat portion here when you drop down from the blue, the original flat portion, and then in the current macro dropping down from the blue, the flat portion. Again, a very dramatic third bottom. This was the third bottom, very flat the whole time. This was the third bottom here. And if you look at the wedges, I mean, it would just make sense as well, where this point is actually in line with this. This point is not in line with the first and second bottom, which makes sense. Also keep in mind, we met APE at the penny after hours before the conversion. So we're always going to come down this low. Also, we're retesting this macro trend. Nonetheless, though, getting back into the flat portion itself. So here's the drop down to the flat portion from the January 2021 cycle on the left. So the drop down, very choppy, and then you gap up. That's your first bottom of the flat portion. You gap up, and then you get this double top, double peak move, which brings you down to your second bottom, which is a higher low than the first on the daily. And over here, it's the same thing. So coming down to the flat portion, very choppy. There's your gap up, same way, gap up, double peak move, and then coming down over here to your second bottom, again, which is a higher low. You also get this little cut move on the side in the yellow that you see here, and this trend above it, that resistance trend, this yellow line, is actually the target, the big time target. This is our macro break line, which in the current cycle is sitting at about $50. $48, $50 is the macro break line. Moving on from that though. So coming down to your second bottom, again, which is a higher low than the first, you gap up once again. So you gap here, and then you gap here into the tri-peak, where you have 3 pokes above that trend. 1, 2, 3, 1, 2, 3, and then reject that trend again, which takes you down to your third bottom, the all-time low and the lower low, which is where we are now. And then from there, you form an uptrend into your squeeze. From the third bottom, that's your bottom, and then it's uptrend into a new macro and a squeeze. So that's what we're looking for. Once again, date range from the beginning of the flat to the peak of January 2021, 342 days. Current cycle from the beginning of it to where we are today, 314 days. So we are less than 30 days away from being perfectly one-to-one with the flat portion. This is lining up very nicely. I have to say it. It's lining up very, very nicely for being one-to-one. That's that. Moving on from that, here's the EMAs. And I'm not going to really go over them. You know what, fuck it. So the 20s in white, the 50s in green. So the 20s under the 50 the whole time here. And then you cross it, you get this double peak type move, where it aligns with the price action, the double peak that you see here. And then over here, same thing. You get this double peak move in the double peak of the price action. Then you cross the 50 to the downside again. You cross the 50 to the downside again. And then you have 2 pokes above in the middle of the tri-peak, one at the second peak and one at the third peak. And over here, same thing. So you cross it, you have a cross over the 50 right here at the second peak, come back underneath, and then another cross at the third peak. From the third peak, that's where you knife into your third bottom, the lower low, and the 20 crosses the 50 to the downside again, and then it meets the price action right here at January 15th, 2021, which is where we are now. We've met the 20. We've actually closed above it 3 straight days. And again, we're looking for this gap up here. We're looking for this gap up to the 50 EMA. I'm not sure landmark-wise whether we get the gap to the 50 EMA, which is somewhere around $17, I believe, right now. Candle, like tracking fractal wise, the landmark is actually $45. This dotted green line here. And again, you know, that could be a 1-day thing. That could be a 1 week or 2 week thing. But I'm assuming we are going to be seeing this gap up just from the January 2023 tracking, the July 2023 tracking, the flat portion tracking. We're looking for this gap up. Whether that takes us to 40, we'll see. I'm expecting to at least see the 50 EMA and probably slightly higher, at least $20 on this gap whenever we get it. So that's pretty much it for that. A few more things before I end the video. Bollinger Bands. Somebody brought this to my attention while I was streaming. They asked me to pull up the Bollinger Bands on the daily, and then I ended up seeing this, where this is, you know, AMC's macro from IPO all the way to present day. And again, the bands are wrapped around the price action pretty much the entire time. Through the entirety of the macro, the bands are wrapped around the price action, pretty normal. But then right at your January squeeze, January 2021, the bands open up like fucking crazy to the downside, and the volume spikes crazy to the upside. And then the bands close up once again, and then at your June squeeze, it does the same thing. The bands open up like crazy to the downside, the volume spikes like crazy to the upside, and then it closes up again. And then all the way through the macro again, relatively normal. The bands are around the price action until now, again, at our third bottom, right before, you know, just macro tracking wise, fractal tracking wise, right before our squeeze, the bands have opened up like crazy to the downside again, while at the same time, the volume is spiking, you know, sitting at January, June 2021 levels. So this looks great. And actually the bands closed up. It's very blurry, but the bands have closed up very tight here, and now they're opening back up again. And the price action daily, we are actually sitting above the top band and looking for the gap up. So that's that. This is interesting as well, really quickly, again, from IPO to present day. And this is on the log chart. So this is the Fibonacci spiral on the log chart from IPO to today. So starting at IPO, here's your first macro, and then the first touch on the Fibonacci spiral right here is where you drop down to the initial flat portion. So you play this out, then you get your January squeeze, and then you get your June squeeze, and you halt June 2nd on the squeeze, which is also the top resistance of the spiral. And then getting into the new macro, the downtrend, every time we've seen a pop that's come anywhere near the top of this resistance line, the Fibonacci resistance up here, we were halted. So halted here, come down, back up to the resistance, halted here, come down, back up to the resistance, halted here, come down, back up to the resistance, halted here. And then in the middle of the tri-peak, we got the breakout, and then the actual breakout move, the gap up, the July, 100% after hours pump that we got, the actual breakout, again halted, and then coming down, and the bounce is actually retesting the spiral and now curling back up to the upside. So this looks absolutely fantastic. That's that. RSI OBV volume update. So here we go again. Here is AMC's macro from IPL. Relatively low volume all the way through the macro, all the way through the wedge, until the end of the wedge where volume starts to pick up into your squeeze, your January squeeze, all-time high volume, the start of a new macro right here. Volume cools off, price action cools off into the June squeeze that you see here was actually lower volume than January because this is the beginning of the macro here. And then from there, the June squeeze, decreasing volume, you get into the downtrend part of the macro, the descending wedge, and then just decreasing volume all the way through the macro. And now we're once again at the end of the macro, breaking out of the descending wedge right here, retesting the descending wedge, and volume is picking up again at those same levels that we saw in January, June 2021. So this is the break and retest of the wedge. This is the point at which support and resistance meet, which I'm theorizing is the beginning of a new macro. Not the actual macro break itself, but your bottom for AMC at this point. So volume is sitting at January and June 2021 levels. At the same time, OBV on the weekly is at all-time highs. While the stock price is pretty much at all-time lows, OBV on the weekly is sitting at all-time highs. And once again, that's because from the top of this move, all the way through it, all the way down, the green volume has outweighed the red. And you can see that here. Green spike there, green spikes, they're outweighing the red all the way through this. All the way through the macro, green volume has been outweighing the red. From $400 all the way down to $7, green volume is outweighing the red. And at the exact same time, RSI is still oversold. I believe it's at 31, but still a lot of room to the upside on RSI on the weekly. So this looks at it, the setup, it couldn't be more perfect. Genuinely, it could not be more perfect. This looks great. And the last thing, and you guys have seen, if you were in the lives, you've seen this, but just covering that, AMC is January 15th on repeat every single day, on every single time frame, monthly, weekly, daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, 1 minute, January 15th playing over and over again. I've covered this multiple times. Here is January 15th, 1 minute time frame. And here is AMC's macro, a weekly time frame. It's a little bit old. There's a few weekly candles missing. We're actually curling up the V. We're curling up in the V on the macro perspective, the V, which ends with your macro break, which is here. I mean, this is your macro break, and theoretically, our squeeze is what we're looking for. But really quickly, I'll go through this again. January 15th, 1 minute time frame. W here at the beginning, W here at the beginning. January equivalent, pull back into an ascending W, ascending, higher lows, pull back into an ascending W, higher lows into your June squeeze that you see here, the flag right here, the flag, and then the downtrend. So there's your downtrend. 1, 2, 3, 4 touches on the top. 1, 2, 3, 4 touches on the top. This one actually didn't make it. We got halted there. And then 3 on the bottom. 1, 2, 3, 1, 2, 3. From your third bottom, you actually touch twice, form an uptrend, a bit of an uptrend here. So from your third bottom, here's your uptrend, reject there, reject again, lower. Here's your third bottom, reject there, reject again, lower. And then you knife into your V. Knife into your V, again, here's the bottom, and then you V out of it, and then you gap up, your macro break. Micro break, this is a 1 minute chart. We're looking for the macro break. So there's a few candles missing here. We are actually curling back up to the upside now. And again, we're looking for that move to $45, $45 roughly, which would complete the V. And then from there, we're looking for our macro break, the gap up, which I'm also theorizing, and I've been theorizing since my very first video on YouTube, we would just wake up to all-time highs. If you're looking at it here, here's your gap up. These candles are above the entire range. And that's what we're looking for on the macro as well, whenever we get our macro break. So that's pretty much it for the video. No complaints. Everything looks great. One thing I do want to mention before I end the video, actually, is that there is a possibility we pull back tomorrow. You know, it is possible. It is also possible we rip to the upside, but I'm just saying this because I'm not going to really get into the nitty gritty of tracking this to this, but it is possible that we pull back to this trend again and, you know, just continue the uptrend here until maybe Friday or, you know, Monday next week, where we get the break and then the actual move to the upside we're looking for. It is possible. It is also possible we just start ripping to the upside tomorrow. But, you know, I'm just going to continue to track this. That's all I can do. Can't control time. It looks great, though. Everything looks fucking amazing. I don't even think I threw in a daily perspective. I could really quickly do that. What am I doing here? TradingView moved the object tree, which is very fucking annoying. I just want to pull up the daily perspective really quick because it looks great. I'll throw in the EMAs. This looks fucking amazing. It looks great. So here's your daily perspective of AMC. Here's your bottom, the first cup, now the second climbing out. We've just seen nothing but green here. Since last Wednesday, nothing but green. Higher closes every day. Since last Wednesday, here was the first close above the 20 right here. First close above, second close above. That day we actually wicked down, bounced right off of it. And then today, our third close above the 20, again, bouncing off of it as support and another higher close. It looks amazing. Absolutely fucking amazing. That being said, that's the video. Not promising an update video tomorrow, you know, barring some crazy price action. If we do get crazy price action, I'll make one. Other than that, if we're just chopping around, forming higher lows, I'm not going to bother. I think I covered everything I needed to in this one. I miss the lives. The lives are way more fun than just repeating myself in update videos every day. But that's it. I will be live soon. And I'll catch you guys in the next one.